Stock of the day is Janus Henderson Group, the company announcing their second quarter results this morning. Operating income $117 million US dollars, compared with $100 million in the first quarter. Assets under management increasing by 4% to $322 billion. And just observing some comments there from the chief executive saying he's very pleased with the progress towards organic growth, saying that we continue to deliver quarterly results. Investment performance is solid and we're generating substantial cash flow and have a strong and stable balance sheet. Josh, how do you look at Janus Henderson then? And I guess we can also look at more broadly, just, it has been difficult obviously for some of these investment managers.
Yeah, I think this one, the report seems quite positive. They've had one of the best quarters that they've really had over the last few years. They have credit and equity funds, so I think in terms of the type of exposure, that's a really good place to be. A couple of the stocks today have that credit fund exposure, so maybe it's a theme I'll touch on a couple of times, but I think that's definitely preferable with this high interest rate environment to just a pure equity fund manager. So I think that, I guess couple of things that are working for and against it. A lot of 65%, 64% of their assets have outperformed the benchmarks. However, they're not getting those performance fees on their balance sheet. So it's, I guess, comes down to allocation size, and they haven't really been able to rake in those performance fees, but the fund's still coming in. So this one looks good. I think if you're after something that is a fund manager, this would be close to top of your list. Given that exposure and the company just sort of growing that organic exposure. So I think Janus would be a hold, maybe look to accumulate if you like the space.
Yeah, okay. Any other fund managers in that space that you're actually finding attractive at the moment?
Slightly different to a fund manager, but similar thematic would be MA Financial. We find they're good value at the moment, very strong performer. They have a lot of exposure to that credit fund as well. Yeah,
okay. Ben, your thoughts?
It's not one I've had a look at for years, and it's been a very topsy-turvy sort of business. I guess I classify this as more of a trading stock. I think generally fund managers are really struggling, and they have for a while, and there's real structural headwinds I think that a lot of them are facing at the moment. And although Janus seemed to have grown its FUM and its revenue, it still had net outflows, only minor, very small. So they actually seem like they're probably doing a lot better than most, to be honest. As Josh said, there's a good diversification there in terms of how they manage money and which markets they're in. So that does take some risk out of the book. But I'd be a bit wary of it. Pinnacle's one, they reported after close last night. I listened to them present this morning, and that it's similar issues. There's real structural headwinds on active funds management at the moment, and it's hard to see, really, to be honest, what's going to slow it down. So I'd just be a bit cautious. I've got to be a hold.
A hold?
Yeah,
cautious.
It looks reasonably priced, and they are growing the top line and the bottom line. So that's better than what most are doing out there.
All right, but it sounds then it's pretty much a sector you're happy to avoid, if you like, at this point.
I think so. I don't know of a lot of fund managers with net inflows at the moment. I think it is a struggle. The markets, I think, have wrong-footed a lot of people, where the narrative even 3 months ago, but certainly at the start of the year, was avoid growth and rising rate environment, and it's completely wrong-footed, I think, a lot of managers, in that growth has actually been the best place to be this year, which is really counterintuitive. So we've got Apple and Amazon reporting tomorrow morning, and that's going to be a big moment, I think, for US markets, but also for what these growth businesses are doing in the short term.
Absolutely.